In this video, we're diving into something that most people don't even think about, whether you should be checking your car and homeowners insurance rates every 6 months or not. And honestly, if you're like most people, you probably signed up for a policy years ago and haven't touched it since. What's going on, everyone? My name's Eric Hunziker, and on this channel, we cut through the fluff to help you save money, avoid headaches, and actually understand what you're paying for instead of just throwing money at another bill. Now, when it comes to insurance, a lot of us fall into this pattern where once we have a policy, we just leave it alone. We set up the payments, auto renew kicks in, and we go on with our lives. And to be fair, it feels like the responsible grown-up thing to do. But here's the part that nobody tells you. Insurance pricing changes constantly. Not yearly, not every few years, but sometimes every few months. And if your rates can change that much, that fast, it only makes sense that you should be checking what else is out there before each renewal. Not switching every time, just being aware. So before we get into the details, let me ask you this. When was the last time you actually checked what other companies were charging? Not what you think they'd charge, not what they charged years ago, but a real quote today. Most people can't answer that. And that's exactly why so many people end up overpaying for years without realizing it. So who this applies to? Hint, pretty much everyone. You might think this advice is only for new homeowners, or people with messy driving records, or people who just bought a new car. But honestly, it applies to just about everyone. If you're young and still building your driving history, rates change a ton for you. If you're older and your record is clean, companies fight harder for customers like you. If you're a homeowner, you might qualify for discounts you weren't eligible for before. If you're renting, bundling might make a big difference. It doesn't matter if you've been insured for 2 months or 20 years. Chances are good you're either paying more than necessary or missing out on a better policy somewhere else. Rates change way more often than you think. So one of the biggest reasons that you should shop every 6 months is simply because the insurance world never stops moving. It feels stable from the outside. Like once you sign up, things should stay pretty predictable. But behind the scenes, the pricing is being adjusted constantly. The cost of repairs changes. If car parts become cheaper or more expensive, your premium might also adjust. Auto shop raises labor costs, paint becomes pricier. A certain model of a car becomes riskier to repair. Insurers adjust pricing to match the reality. Your personal profile changes without you noticing. Maybe you move to a new area where insurance is cheaper. Maybe your credit improved. Maybe an old speeding ticket finally fell off your record. Maybe you changed jobs and now drive fewer miles each day. All of those things matter. And a company that wasn't the cheapest for you last year might suddenly look a lot better now. Competition changes. Some insurers raise their prices because they're tightening their budgets. Others lower their prices because they're trying to bring in new customers. Sometimes a brand new insurer enters your state with aggressive pricing. It's always shifting, always changing. And that's why checking twice a year gives you an advantage that most people don't even think about. 2, why the 6-month schedule works so well. Most auto insurance policies renew every 6 months, which makes it a natural checkpoint. This doesn't mean you must switch, just evaluate. When your renewal hits, your insurer is basically reassessing your risk and deciding whether your rate stays the same, drops, or goes up. And because they're doing that twice a year, you might as well check what everyone else is offering at the same time. Plus, life doesn't stay the same for very long. 6 months is enough time for things to shift. Your finances, your driving habits, your home setup, everything. Checking twice a year keeps you from drifting into overpriced coverage without noticing. And honestly, it also keeps you aware of your own policy. Most people don't even remember what their deductibles are or what their policy actually covers until something goes wrong. You'd be surprised how many people are carrying more coverage than they need, or way too little. This check-in keeps you sharp. 3, how life changes can shift your rates without warning. Life comes at you fast, and insurance doesn't wait for you to update it. It just charges you based on whatever outdated info it has on file. So let's go through a few real-life examples. Bigger life events. If you get married, divorced, have a kid, or you buy a new home, those are all things that could dramatically change your rates. Insurers see certain life events as signs of stability, while others change your risk level. Buying or selling a car. Every car has its own rating. Some cars are cheaper to insure, not because they're cheaper, but because they're safer or cheaper to repair. So maybe you swapped cars within the last year, but never checked what other insurers would charge for that specific car. You might be missing out. Your driving record improves. People forget this one all the time. Tickets fall off. Accidents fall off. Points drop off. You should never assume your insurer is lowering your rate automatically. Many don't. Your credit score improves. This one shocks people, but in most states, your credit score does affect your rate. If your credit got better, especially by 20, 30, 40 points or more, you might qualify for a much better rate elsewhere. elsewhere. Shopping every 6 months keeps all of this from slipping through the crack. 4. Avoiding random rate hikes that have nothing to do with you. One of the most frustrating parts of insurance is when your rate goes up and you didn't do anything to earn that increase. No accidents, no claims, no speeding tickets, nothing. You're just like, why am I being punished for being responsible? But a lot of the time, the increase has nothing to do with you individually. Maybe claims went up in your city. Maybe severe weather caused a lot of homeowner claims in your state. Maybe inflation hit the cost of repairs harder than expected. Maybe the company itself had a bad financial year. When that happens, you only really have two options: accept it or check if someone else will insure you for less. Insurance companies are always watching each other. If one raises rates, another might lower theirs to stay competitive. And when you have quotes from multiple companies, suddenly you have the leverage. You can call your insurer and say, hey, I got a quote for $50 less per month from X company. Can you match it? And a lot of time, they actually will. 5. How to shop without wasting your time. Shopping around doesn't have to feel like a chore. You're not calling 40 companies or reading every page of a policy. Realistically, you can knock this out in 10 minutes. You just pull up your current policy, make sure you know your coverage amounts, and compare that same setup with a few other companies. That way you're comparing the same thing across the board and not accidentally judging a cheap quote that only looks cheap because it barely covers anything. And don't forget to check for discounts. Bundling, home security systems, good credit, safe driving programs, low mileage, these things really add up fast. Think of it almost like checking flight prices. You're not committing to anything just by looking. 6. A few things to watch out for. Just because a quote is cheaper doesn't always mean it's better. If the deductible is way higher or the coverage limit is too low, that savings might not be worth the risk. Also, if you're in the middle of a claim, switching companies is not the move. Finish that claim first. And finally, check for fees. Some companies charge a cancellation fee or have weird policy terms. It's rare, but it's always worth asking. 7. Life events that should automatically trigger a policy review. Anytime something major changes in your life, it's worth checking insurance quotes even outside of the 6-month cycle. Got married, bought a new house, renovated your kitchen, put on a new roof, added a teenager to your policy. All of those things can lower your rate or change how much coverage you actually need. So shopping around every 6 months isn't about constantly switching or playing the system. It's about being aware. It's about not letting yourself slowly drift into paying $300 more a year than you should, simply because you didn't realize that the market changed. Insurance is one of those expenses that just keeps rising unless you check it. And by checking regularly, you take control again. You stay informed. You make sure that the coverage you have still fits the life you're living right now. And honestly, that peace of mind alone is worth the few minutes it takes. So if you want to get started with our car insurance survey or our home insurance survey so you can find the best insurance for you, then go ahead and click the link down below in the description. Now, these are affiliate links, which means we do earn a small commission when you use them at no extra cost to you. And these commissions really help support the channel and allow us to continue to create free content just like this. So if you end up using them, we thank you so much in advance. And if you found this video helpful, don't forget to like, subscribe, and hit that notification for more videos just like this. Other than that, thank you so much for watching, and we'll see you here in the next video.